Hello everyone, happy Sunday. This is Simon with AvaTrade, and we're starting our weekly trading plan webinar. And of course, I want to welcome everyone. Welcome back to our webinar, and special warm welcome to the new people. And for those of you that this is your first time, just to share a few words about the webinar. It came up as a request for homework, and I started doing this webinar with the idea of creating a structure. So the title says it all pretty much, your weekly trading plan. And as always saying, as the traders like to say, you plan your trade and then you trade your plan. And this way we can minimize impulsivity maybe in chaos and lack of control, because it is important to have a plan in anything, and especially in trading. So that's what we're trying to do here. A few things about myself. My name is Simon Friedman, and I'm a senior account manager with AvaTrade. I've been involved with trading professionally for the past 22 years. I started, there was June of 2000 when I joined one of the prop companies in New York City as a proprietary day trader. And I've done that for about 11 years, and after that I moved on to trade in a different way, not a full-time day trader, and I started to mentor, educate other traders. And currently, as I said, I'm working with AvaTrade, and I'm very excited to have an opportunity to share my experience and knowledge with our customers and try to help them within the structure of the company. So what we're doing here, it's very simple. The agenda, we're going through indices, stocks, commodities, Forex. We try to start a little bit with fundamentals and the big picture, and then we're moving into the trading platform and trying to look at the possible scenarios. These are the channels that you can keep in touch with us. Of course, this is the Telegram. You have Twitter and my favorite YouTube channel. I know a lot of you sometimes have issues with attending the live webinars and events. So most of them are being posted on YouTube. And of course, you have a lot of educational tutorials there, and anything that you can find there could be useful and educational to you. And of course, the risk warning, you can find the full document at avatrade.com. And the idea is that we're not really recommending anything. The whole structure is purely educational and informational. So big picture, let's start with the big picture. And as I mentioned to you last time we met, that we are facing the Thanksgiving and the Black Friday. So I just took a screenshot, something that I like to do. It's good to take a look at things. This is published by Barron's, and it says right here that Black Friday sales were strong. Shoppers may spend more than $9 billion online this weekend, Adobe says. And it says right here that consumers spent a record $9.12 billion online on Friday, up 2.3% from last year, according to Adobe. Okay, and strong spending expected through the weekend and into Cyber Monday. And it says right here, electronic smart home items, audio equipment were among the drivers of that online growth, and they go specifics towards being sold. Now, first a thought comes to, yes, it looks great. That means the consumers are strong and everything else. But I think if logically thinking this situation, the whole process that the Feds are going through is really fighting the inflation. So by increasing interest rate and taking other measures, they're trying to really slow the inflation. That means that demand would become lower. So I really don't know how they will react to these numbers. And again, part of the big picture, this coming week, we have one of the important news or important announcements, the numbers of NFP, the non-farm payroll. And just to remind everyone, three things the Feds are looking into in their decisions, and next interest rate decisions coming next month. I think they have a 2-day meeting on 13th and 14th, I believe. We'll need to double check that when we get closer to it. And they see they look at three things: the growth of the economy, the situation, how the economy is doing in general. They're looking at inflation. That's why the less CPI numbers affected the market strongly, and they're looking for employment situation as well, which is mostly watch the NFP numbers, the non-farm payroll, and of course the unemployment rate as well. So this Friday, we're getting to that. So before I get to to economic calendar, excuse me, a few more things. So we had Black Friday that looks very strong, right? And FOMC, of course, last week we had FOMC minutes, and I'm just gonna quote a few things that I took out. It says the senior officials at the Federal Reserve expect smaller increases in interest rate will soon be appropriate as the threat of recession grows. Although the Fed, I'm continuing quoting, although the Fed still expects rates to rise higher than previously forecast, senior officials are unsure just how much further they will go. Slower rate hikes, they say, would give them more time to evaluate the lagging effects of the economy amid the rising threat of recession. So it looks like a mixed message. A positive thing came out of it that we might see a smaller increase coming in December. As you know, we had few of them, 0.75%. So a general kind of a priced-in increase, it looks like it's 0.5, and there's still opinions out there, and they say that we still might get 0.75. And of course, we'll be getting the data. As I said, NFP is one of them that will be really watched closely by the Feds in their next decision as far as interest rate. So again, Black Friday, FOMC we had, and we had this week we heading into the NFP. So let's take a look at economic calendar really quickly. And again, I must repeat this. What I do here, I just take the high impact announcement. As you can see, they're all marked in red. You can filter them. Again, you can see it on our web trader. You can see it on the app we have, the AvaTrade Go. You can see it online. Many providers are giving this is a public information. So what I do here, I just filter out only the high impact events, and you can filter them by the country and so on. So let's see what we have in this coming week. We have retail sales from Australia on Monday. We have GDP numbers from Switzerland. We have a consumer price index from Germany. That's the inflation number. We have GDP numbers from Canada. That's also on Tuesday. On Wednesday, another number from Australia. We have also inflation number from Australia. And here comes China. As you know, we've been talking about almost every week, and today we'll be talking as well about the Chinese economy. So we have manufacturing and non-manufacturing PMI from China. We have CPI numbers from Europe. We have ADP employment change, which is kind of an indication what NFPs might be. It comes 2 days before the NFPs. So that's also on Wednesday. We have GDP numbers from the US. We have Powell's speech, which is also highly important, is being watched by traders, investors, funds, anybody involved in the market. So that's going to be also on Wednesday evening. Thursday, we have retail sales from Germany. The governor of Bank of Japan speaks later, Kuroda, and that's on Thursday. And again, just we've been talking about a few times. As of now, Bank of Japan didn't change any interest rate percentages. So maybe we'll hear something new. We have manufacturing PMI from US on Thursday as well. And Friday is D-Day, the non-farm payroll. And we have employment data from Canada. And before that, early in the morning, we have the governor of Bank of Australia speaking. And this is it for the week. Now, for the new people, non-farm payroll, besides being watched by the Feds, even in different circumstances in the regular days or years, non-farm payroll is something that moves the market. And there are a lot of people that waiting for these numbers. They like to trade volatility. Some are just waiting for the numbers to get more clarity in the direction if they're longer term traders and so on. But for the new people, when this number comes, you can watch it, you can participate. It's up to you on your risk level and everything else. But in any event, if you take a look at the announcement of non-farm payroll, you see high volatility. That means you will see those candles with the huge tails up and down, and it involves Forex, it involves gold, it involves equity markets, of course, the indices, and pretty much all the market, the broad markets being affected by the announcement of NFPs. And that's usually first Friday of each month. Okay, so now that we went through the things, let's take a look at the charts, and let's start with China, as I mentioned. China, as we know, it's pretty much the world's factory or production house, if you want to say that. And they've been having a lot of issues lately. And just again, for new people, that this is the first time, or in general for the new traders, Chinese economy has been struggling. It's been struggling for a few reasons. They had issues with the real estate development companies. Some of them went out of business, somewhere on the edge of filing for bankruptcy, and the government really kind of stepped in. It reminds me a little bit of a scenario of 2007, 2008 in the U.S. So they stepped in, they lowered the rates, they pumped some money into the economy, but in general, China is not doing that great. And if you take a look at the chart, and especially if you take a weekly chart, we've been falling from the peak that we had in 2021, mid-February. We kept on making lower lows, lower highs, and then we came a few weeks ago, we came and we broke through the low of mid-March. That's the beginning of pandemic, the COVID or Corona at that time. They called it, or we called it. So, so they economically they've been struggling, and also COVID, especially recently, as you know or might know, that China has the zero COVID policy. They're very strict rules if you travel, if you enter the country, and so on. So it's very, very strong. A lot of cities being shut down, reopened, shut down again. The production is being suffering. If you probably follow things, you would know that the factories or the plants that supply things for the Apple company with the iPhone, they've been shut down. That create a lot of issues. And by the way, if you do follow the Apple stock, they just this past week there were news that if you're ordering the new phone, the first phone available will be coming to you somewhere in January. So if you take a look at the charts, right, we really sold out, and we tried to recover here, and now we're really sitting. Few days we sit at these levels at 12,200, around that, plus minus. So again, it's all about COVID, and in this case, of course, other things, but mostly COVID. And there's a lot of turmoil in the country, and a lot of cities, like I said, being shut down, a lot of production being shut down. So let's see if any news, maybe any changes in policy. The people are really protesting there. They're trying to soften this zero policy, zero COVID policy, and let's see what's happening. So that's as far as China. Again, doesn't look that great. We did have a nice pop after the sell-off. Take a look at the weekly chart. We had a nice recovery here, but we still didn't close in a way higher than this week of October 23rd, when we broke through the beginning of the pandemic lows. Now, U.S. indices. Now, again, we know we had the unusual week that just finished. We had Thursday, Thanksgiving was the market was closed, and Friday was half a day session, only from 9:30 to 1 p.m. in U.S. stocks. So it's hard to judge by that week. And this week's going to be very interesting, coming out of Thanksgiving weekend, the Black Friday, ahead of NFPs. But if you look at the charts technically, the S&P is trying to recover here. And again, speaking of a big picture, some analysts are predicting Christmas rally, and that's kind of a traditional thing. They call it Santa Claus rally on Wall Street. What happens, and that's what we had last year. Of course, the market made significant moves to the upside. We made nice highs, and then comes January, things falling. And you could read about and research. A lot of times, they running into the end of the year, just closing the market at the highs, so the Wall Street would really enjoy their bonuses. And this is a common thing that's happening a lot every year. They're trying to do that. So they're debating, will we have the Santa Claus rally this year? And we'll see. Nobody could know yes or no. So the S&P's daily chart would try to break through the recent highs, and this was the mid-November, and the high here was 4,050, so 40.50 and a half. And so far we couldn't break that. Nasdaq, it's even weaker. It's actually sold out on when was it? On Friday. And you ready for this? Dow Jones has been super strong. So I try to understand why Dow Jones is strong, and one of the reasons, of course, that we spoke about maybe a few weeks ago, that Dow Jones is actually least affected by the high dollar, because most of the companies within it, and I encourage you to look into things that you trade. If you trade Dow Jones, it's only 30 companies, so it's good to know what companies are within this index. So most of them doing business domestically, not all of them, but most of them. And according to analysts, they said that they really they are less affected by the high dollar that's been happening lately with the increases of the Fed. So as you know, as you could see, Dow Jones is the strongest one. We actually closed above the highs of mid-August that we had, from which we sold out and made the lower low. So we're there. Now, will we hold? That's the question. Will we hold this level and continue higher? And if we do, what's next? So if we continue higher here, we might come and retest these levels here around 35,000 maybe. And if we start closing below this level of 34,200, that's the opposite scenario. We start closing below and start building a resistance here, we might actually slide lower and look for support. So Dow Jones is the strongest out of three again. So we'll be seeing what happening again, NFPs this week, and let's see what's happening there. Now Dow Jones, DAX. She even said Dow Jones. DAX is kind of copying. It's a European copy of the DAX, is European copy of Dow Jones, in a way that it really follows Dow Jones, and there's similarity, and they kind of move together in a way, as you can even see it on the chart, right? So it's been also strong. It didn't break through this recent highs yet, and that's the beginning of June, the June 6th level, but it looks like it is getting there. By the way, it shows by as DAX 30, but it's already 40 stocks, 40 German stocks within it. So again, let's see what this week is doing globally, how the NFPs are coming out and other things. In any event, if we are continuing higher, so this level around 14,650, around those levels will be tested as the previous resistance from which was sold again. So that's Dow Jones. FTSE UK, it's at the very interesting level here. Okay, we moved here back in September 12th. We were at the same level as we closed on Friday. Now, the next day, we tried to spike higher, but that triggered a reversal and we sold out from here. So as you could see, this is the third day in a row, the third attempt within 3 consecutive days to break through the highs, and it looks like somebody is selling there. So it could be a possibility. Again, it depends what the global stocks are doing and the global indices are doing. We might actually have a hard time breaking it and eventually could start sliding and maybe retest the 200 moving average here. And of course, the opposite scenario, if we do finally break through the current level here, we might continue high and retest this high of August 19, which was 75.75, so 7,575. And if we do break that, that comes a serious level of around 76,000. So you could see we bounced from it here, 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 and here. Was a lot of attempts, and we couldn't really break through that. So that's as far as FTSE. Nikkei also is sitting at a very serious level here, as you could see from exactly where we are. We sold out, and the move started on the 13th of September. And now we're fighting. This is again the 3-day attempt also to break through it. On Thursday we tried but closed lower. Friday was also a red day. So we are having difficulty breaking this level of 28,435. And if we are struggling here and market turns south, in general, the global market, we might see a reversal and continuation to the downside, maybe retest moving average here. If not, before that, we might retest this recent support that we had here around 27,860 and so on. So that's as far as Nikkei. Now, Nifty, we've been, kind of secretly making fun of it in a way. But then we realized, we discussed it, you and I, a few times, that Indian economy is doing great. And even Apple is considering, or they might be already in the process of moving some production there. So as you could see, any time frame, it looks super, super strong. On the weekly chart, we're pretty much at the highs. And on the daily chart, it shows, I think this was the new contract rollover. That's what you. That's why you see the gap. So it looks like the sky is the limit. We might continue higher, but the one thing when the gaps are happening, sometimes they tend to be, they try to close the gap before even going higher. So we might see actually the sliding to close the gap between the contracts, I believe here. So that's as far as FTSE. So we established that the indices are strong in the past few weeks since the whole move started pretty much when we finally had some data as far as inflation showing a little bit of a slowdown. I believe it was 7.7 a couple of weeks ago instead of 8%. Expected, so the market reacted to it. So let's see what NFPs bring. Let's see what other inflation numbers that we spoke about in economic calendar bring this week, and in general, what the situation is. Again, going back to big picture, unfortunately, the war is still going on. A lot of destructions in Ukraine, a lot of developments there, and of course, it is affecting everything, including commodities, and of course, the lives of people and so on. So let's move to individual stocks. And speaking of Dow Jones, the reason it's high, as we said, that a lot of stocks are in domestic business. So what I just realized that the few stocks that within it really moving the index very strongly, and that's one of them. It's Walmart. I just want to show it to you really quickly. If I can find it here, yes, right here. Take a look at Walmart. Walmart's been strong. Let me just move to a daily chart. Since the earnings, the Walmart's been going higher, nice moves, recent moves, very fast. Also, Boeing, it's been super strong. If you can see, this month in November alone, we are moving from around 140 to 178, 179, about $40 move. And these stocks are within the index, and they're moving in index tremendous. Also, financial stocks. You have J.P. Morgan, that's been strong this month. You have Goldman Sachs, that's been strong this month, and they are moving Dow Jones higher. So speaking of the stocks, okay, let's take a look what could be here. So Boeing is trying to make a double top here. So we came on November 10th to this level. The high was 178.89, almost $179, and then we had a nice correction here, and then we're on the way to possibly retest this level. It could be anything. I think I mentioned one of the webinars. This the Boeing. This could be actually military orders. As with the war, a lot of countries are really building up on their military arsenal. So this could be it as well. Could be other reasons. Maybe they're ordering more Boeings. I don't know the fundamentals, but it looks like Boeing has been really strong here. So that's Walmart and Boeing. We have Goldman. Let's take a look at the banks. Actually, Goldman Sachs is similar idea. It's trying to retest these recent highs, but these spikes are showing. As you know, we're going high. We're hitting the highs here, both of the spikes, and then we're closing lower. So it looks like we could be hitting the tops, or at least tops at this moment. If you take a look at the weekly chart, we're trying to hit this 390, 391 level, and we're failing to go higher. So it's important to watch this upcoming week, what's happening in the banks. We might actually face the correction here, as they really made a nice run. Take a look, Goldman Sachs, in a month, maybe 5 weeks, we moved from the 287 to $100 move. $100 move in Goldman. Okay, that's tremendous. That's about what, 30%? This, if I'm not mistaken. Now, Bank of America, not as strong, but also had a nice move. J.P. Morgan, as we said, has been strong. You see here, we actually we are higher than the recent high, so we're kind of making a higher high. So technically speaking, if we might actually continue to the next resistance here, or if we move below these highs again, we might actually see how the low would be. But the definition is very simple. If we are making the higher highs and the higher lows, that the trend might continue further to the upside. The Citigroup, not as strong. So financial, we'll be watching the financial for for what's next. Now, I want to bring up oil for a second, even before we go into commodities. It's very important. Now, oil's been weak, and take a look on this day, on the 21st, we hit the lowest point in 2022. We hit 75.05, and then we tried to move higher, and we refused to go higher. We had the resistance at the level that we mentioned a few times, around 81.50, and we went lower, and we closed Friday at 76.21, about $1 away from this recent low. So what came to my mind, and I think I mentioned it as well, the two stocks that are very sensitive, of course, to the oil prices. You have ExxonMobil, okay, and you have Chevron. So ExxonMobil has been very, very strong. And this year, I think it made a very nice move. It's up about 86% this year, according to analysts. I didn't really calculate it, but it looks very strong. So that's on Exxon. And Chevron as well. It's super, super strong. If you remember, both the stocks had very nice earnings, of course, with the prices of the oil at that time were much higher. Now, what's interesting about Chevron So a few things. Before I did the research, I thought, okay, oil is selling, so why Chevron is not selling? And one of the things I just found out that they were actually expecting to get the license, a U.S. license, to pump oil in Venezuela again, and they got it. According to Dow Jones News that I researched, they actually got that license, so they're going to start again pumping oil in Venezuela. And of course, it looks good for the company, and I think that's why the stock is not really falling on the oil, making the lows for the year. But again, at some point, it might actually react to it. So again, we'll be having on the radar again ExxonMobil and Chevron for the actions relating oil prices. So let's move. If we already know oil, let's move to commodities really quick. And as you know, when I talk about China, I look at copper right away. So with the China weakness, copper had a nice move, an initial move on the Chinese index. Let's take a look really quick. So on this move up that ended on the 14th of November, copper actually had a nice move. And let's see if it's the same day. Yes, 14th of November we start selling here. So as you could see, it does work sometimes very closely, sometimes not so closely, but there is a correlation between China and copper prices. Why? China has been using or is using a lot of copper, especially for construction. And with the economy and construction slowing down, the prices of copper really suffered lately. Okay, so as you could see. So we'll be watching copper based on what's happening in China and in general globally with the global indices. It looks like we're approaching this level of around 3.59, 3.6. And it was a support here from which we made a high. So we might be holding this support. And if we are, we might continue higher if the global economy is showing some strength and China as well. And if we start closing below this level here, we might actually see sliding and maybe retesting the moving averages here. And that's around 353, maybe 350 lower here. It could be possible as well. Now, natural gas. Natural gas had a nice attempt after we broke this resistance at around 7. And I think this day was the 23rd. We had a nice run. And in 2 days, we just give it up. And we are below 7 again on natural gas. So again, as I always say, there's a lot of fundamentals here, the weather and other things, the war with Russia. And they were working now, the whole Europe is trying to put a cap on the price of oil, and that's mostly related to oil, but of course natural gas with all the Russia manipulation as well. We don't really know what's happening, but what we do see here that we're back below $7 again, and we might be continuing in this case. Also, what you have here, the 100 moving average crossed below the 200 moving average this week. So that's a bearish sign. If you talk to analysts, we might see actually continuation and maybe retesting the 50 moving average and so on. It's very hard to say because here you can really just approach it in a purely technical way because fundamentals in commodities are very strong, like the weather, like geopolitical situations, the war in this situation, and so on. So we'll see what natural gas is doing. And what could be here, that $7 could become, at least for now, a resistance, but then we would need to really test it and see if that's the case. And if it is becoming resistance, so as I said, we might go lower and retest lower levels. Now, gold. On the weak dollar, gold really tried to recover or to move higher here, but we're having a hard time breaking through 1760. As you could see here, we did hit the 200 moving average. That's the previous week, as we discussed on the 15th, and that was the top, or at least for now. And then we start sliding, and we couldn't really move higher here, the 17, around 1760, between 7050, 7060. It looks like a lot of actions. If you take a smaller time frame, you could see here, like we keep on hitting 1760, 1760 area, and the support around 1745, 1750 area. So again, it depends a lot of what the Feds are doing next. NFPs definitely will affect gold one way or another. So we'll be watching for that. And as you could see here, again, for the third time repeating around this 1760 area, it looks like the resistance is holding up. And of course, the dollar is hitting support levels. It looks like it. We also would try it on the spike the previous week. We hit 105.15, but this past week we couldn't really reach that level again. So it looks like the buyers are holding it. Maybe they're anticipating something that we don't know. Definitely, some people know more than others. And of course, again, NFPs and the next actions of Feds will determine, will the dollar hold this level and continue higher, or will the trend change and we continue lower here in the weekly chart? As you could see, it's even clearer. This level that we currently are retesting around between 105 and 105.5, it looks like the support as of now is still holding. So if you take major currency pairs, they're really doing the same thing. They're holding the current levels. We had a nice gain. If you remember, euro dollar was fighting for the parity. We went lower, went higher, then we broke up again, and then we closed. The current close on Friday was 103.86. So it's a nice move. But we are facing resistance here. If you take pound, also had a nice move. We are currently trading about all the averages, and we are facing this resistance here on mid-August. As you could see, if you draw the line here on the high of this level here, we are facing resistance, and it makes sense. Take a look. It was a support here, then it was continuous support and became a resistance. Then again, there was a big fight here. It was changing between support and resistance. We were trading up and down this level here around 129.40, and then now we keep on hitting that level again. So again, depends what dollar is doing, depends what actions Bank of England is taking. So if this continues to be a very strong resistance, it's obvious that we will try to retest lower levels, maybe again the 200 moving average, maybe the support of 118. Because remember, not very long ago we hit this low here. That was end of September, only 2 months ago. 2 months ago, pound dollar hit 103.41. So there was a tremendous move. So I wouldn't be surprised if we continue lower and find lower levels of support as well. Now, Australian dollar, let's take a look at it really quickly. Similar ideas. You can see double top. We're having a hard time breaking through the current level. So all across the board, as you see, the dollar couldn't break. Again, just to show, it couldn't break the support. So all the other currencies against the dollar really are sitting at these levels, anticipating the next move. So it's good to know that something is cooking. And again, it's impossible to predict, but we'll be watching the price action and see which way we go. And it depends fundamentally, of course, on NFPs, on any signals from the Feds, maybe even speech of Powell will reveal certain things that we can pay attention to for the upcoming week. So that's as far as currency. And I just want to bring one currency to your attention, something that I used to follow a lot and I neglected it lately, USD Norwegian krona. And it's also related to oil, as Norway is also a producer of oil. And take a look, dollar's been weak, as you know, and we came to this level. First of all, we are playing with 200 moving average here. And also, we are approaching the level of a lot of actions here. Take a look, support, resistance, support, and the beginning of a move started right here. at 980. So we are approaching that level. And again, as Norwegian krona is very sensitive to the oil prices, so hypothetically, if oil continues sliding and dollar regains some strength, we might see the move to the upside on USD NOK. Something to watch. Of course, it depends on a lot of things, but here you have a nice kind of situation where you have the 200 moving average kind of holding it, and also we're approaching a support around 980. We'll be watching what's next. Again, if we're holding here, that might signal a reversal. If we're breaking through this level and start closing below it, that might mean that we are moving lower. That's technically and fundamentally. It will depend what the dollar is doing in general and what the oil is doing in general. And also based on oil prices, anything to do with Canadian dollar is worth watching. Again, for the new people, Canadian dollar is also sensitive to the oil prices, as Canada is a big producer of oil as well. So let's just take a look really quick. So now we established that oil has been weak, so logically Canadian dollar should be weak as well, right? So let's take a look. And it does show Australian dollar is having a nice move to the upside against the Canadian. Japanese yen also has been selling. Euro CAD, very nice move to the upside. So as you can see, correlations sometimes work. And CAD against CHF, super weak as well. New Zealand dollar strong against the CAD. And here's very interesting. We're approaching, or we're already there, a level of resistance that we couldn't break and made lower lows. So this could be very interesting actually to observe at the current levels, the NZD CAD. GBP CAD as well, also similar idea. We are at the levels that could mean a strong resistance here, and then we went lower here. We came back to this level here around 160, 170. So to watch CAD, of course, with the oil being weak. And let's just take a look at the oil really quick again. So what could be logically, as we said, we might go and retest the current low, and that's the low of the year, 75.05. And if we do break this level, we might continue lower. Could go anywhere, could go 70, can go to 65. Anything can happen. And again, fundamentally, we'll be seeing what's happening. There were a lot of things in oil, like I mentioned. They're trying to put the price cap for Russian oil. OPEC is playing around. Sometimes some news said they're increasing production, then they say they're cutting production. It's very, very unstable from that point of view. So again, just technically speaking, this level here, September 25th, we were at 76.26. And this past week, we were at 75.05, but we didn't close there yet. So let's see what's next. Oil looks to the downside, and we'll be watching next. Now, let's take a look. One more thing I just forgot to mention. Let's take a look at Disney stock. And also, this is, by the way, one of the stocks that within Dow Jones. And the stock had a move last week on the news that Bob Iger returns as the CEO of Disney. And he's been good for Disney before he left, and now he's back. So they actually asked the question in a Disney way. They said, will the magic last? So initially, there was a gap up on the news in the Disney stock, and then we went lower, and they were trying to really retest that level, and the strategic $100 level. Maybe we'll try to test that. Just want to mention, because this is serious news when we have a reshuffling or shuffling within the CEO levels. That's very important, and that affects the company tremendously. And Let's take a quick look at cryptos. As you know, FTX thing is still there. Not so much positivity. Some analysts said that there were a lot of short action building up around Bitcoin and other cryptos. And as you could see, after the recent sells, there's not much move to the upside. So we are, nothing changes as of now. We are between 15.5 and 17,500 on Bitcoin and Ethereum. Similar picture. We are trading between 1,000 and 1,200, so it's like a $200 range over here. That's it pretty much. Let's just wrap it up really quickly. Of this week, we're having some announcement economic calendar, and the highlight, of course, it's going to be the NFP numbers on Friday. We are after the Black Friday and Thanksgiving weekend when the retail spending is higher than last year by 2.3%. Let's see how Feds will react to it, how market will digest it. It's going to be an interesting week going into NFP. So I want to wish everyone a great weekend, whatever's left, and get some energy. Prepare yourself for the upcoming week. And of course, I want to wish everyone a successful trading week. And we'll be back on Sunday. Take care of yourself. All the best. Bye-bye.